Have you ever wondered why there is no item field in fixed assets creation page? If you look at major modules in Oracle Fusion, it can be inventory, OM and AR, purchasing and AP, discrete manufacturing, process manufacturing, and projects. In all the transactions that we create in these applications will have item field. They will be referencing an item. Inventory tracks, we track the items and stores the items. In OM and AR, we sell items to customers and receive payments from customers. Similarly, in PO and AP, we buy items from suppliers and make payments to suppliers. In discrete and process manufacturing, we manufacture the items. In projects, we procure the items from the suppliers for certain specific project, or we get the items from inventory for the project, and then we make billing for the customer. In all the major applications there is item. Transactions are categorized or tracked with item, but in fixed assets model we don't have item. The question arises, why FA don't have track at item level? The reason is the purpose of fixed asset module is not operational tracking. Once we capitalize an asset as a fixed asset, then that is not the importance of item goes away. Then fixed asset module job is to track the financial value of the asset over its lifetime. So instead of item master logic, FA uses something more powerful to categorize the items and to track them. FA uses asset categories to put assets into buckets for tracking. These buckets you can treat it as asset categories. Each bucket is an asset category. Let's take example of furniture. If you look at a multinational organization which performs business in multiple countries, it will have thousands of furnitures which are used to support its business operations. So in FA we don't track them all at that item level. Instead, when we create a fixed asset, we'll put that into furniture asset category, and then we will track its depreciation over its life period. Then if you go little deeper into actual real business, let's say if you take a multinational organization which is doing business in US and UK, and it purchases laptops both in US and UK, but as per country regulations the life of the laptop in US can be different and in UK can be different, and they will have different depreciations as per the country norms. Then the question arises, how FA is handling that, how it is achieving that business. The answer is it will maintain different asset books for each country, and the category will be the same. It can be like a generic computer category, right? But it has to be assigned to each asset book, and at the category level we will track what is its lifetime and what is its depreciation, and that can be different from each asset book, and that's how this business case is achieved in FA. The main agenda of this video is we'll understand asset categories in detail and see how they control accounting and how they interact with asset books, and we will understand how the asset categories form structural bane of the fixed assets module. We'll understand this through a case study. I have kept that case study in this tabular format. Let us spend some time to understand this case study first. Let us take, there is an organization which is doing business in US and UK countries. It can purchase car in US and UK as well for its business operations. And as per US rules, if you remember, even we discussed in previous videos, each country will have its own corporate book and tax book. Similarly, US is having its corporate and tax book. UK is also having its corporate and tax book. And as per US rules, the life of the asset in corporate book should be 6 years, whereas in tax book it is 5 years. And in UK, let's assume all this, it is 10 years, and in tax book it is a 5 years. And the depreciation methods also differs. And in corporate book in US, in the first month when we place the asset into use, it should lose 20% of its value, and in the rest of the life it should reduce in a straight line depreciation for the rest of 6 years. Let's say that is the depreciation requirement. And in the tax book it follows MACRS, modified accelerated cost recovery system for half year convention. And let's say in UK it follows straight line depreciation. There is no 21% bonus depreciation when we place it in service in UK. And in the tax book, let us say it follows the same MACRS HY. Let's say this is the business scenario. Now we will execute in Oracle Fusion, and then in the process we will understand the asset category, depreciation methods, like how life is achieved for different countries using the asset categories. We will understand these in detail. To explain this case study in a diagrammatic way so that you will understand it even better, I have used this diagram. Let's say you have in US and UK, you have corporate and tax books. And in the corporate book, let's say our case study is about car, right? It is in a vehicle category, and let's assume it has 5 years life and follows some straight line. This diagram is not 100% matching with our case study, but you can treat this as a sample to understand the hierarchy. And the same vehicle, when it is in tax book of the US country, it can have different life and different depreciation method. Similarly in UK, under corporate book, an asset category will be there, and same can be there under tax book with different life and different depreciation methods. That is what we are trying to explain in this diagram. Now to achieve this is what we are going to do in the fusion. First we'll create an asset category with the name SM car, and we will assign it to US corporate and US tax books, and then similarly UK corporate and UK tax books. And while assigning to this, we will set the accounts, asset life, depreciation method, bonus rule, and prorate conventions as per our case study that we have seen in the previous slide. Now we'll create an asset in US Corp and UK Corp books, and we'll copy them to the tax books. We will run the depreciation for Jan 26 period, and we will review the depreciation results. Now let us begin with creating an asset category with name SM car. To create an asset category, go to setup and maintenance. In financials offering, go to fixed assets functional area and click on manage asset categories. To create the asset category, click on create icon. Now we want to create an asset category with major category name as SM and minor category name as car. So when I click on it and say SM, it is not displaying any value. So the root cause is these are KFF values, right? And for this KFF value set, this SM value should be defined in the value set first. Then only we can create a asset category with major category as SM. So this is not there, so it is not coming over here. Let us go and enter this SM value in the value set. To enter the SM value in value set, right? First, in the manage fixed assets key flex fields, select the category flex field, click on structures, click on search, click on edit. Here you can see the major category and minor category fields. When you click on it, you will get the value set name. Copy this value set, click on save, click on done. Now click on the manage fixed assets flex field value sets and give the value set code that we have copied earlier. Select it and click on manage values. Click on search. Here click on create icon and enter the value as SM. Description also SM. Now save and close. Similarly, we should enter the value for the minor category value set as well. and its value set name is minor, FA minor category. Manage values. Click on search. Click on create icon and enter value as cars. Click on save and close. Yeah, we should provide the independent value as well. Click on SM. Click on done. Now go back to the other tab where we are creating the category. Now search for value SM. Now we can see that. Select the SM and in the minor category, select cars. Category type we can take as non-lease, owned. These are optional. Click on save. Now our first step is completed. We have created the asset category. Let us mark it as done. The next step is we need to assign this asset category to 4 asset books. We will first start by assigning it to the US car book. To assign it to the US car book, click on plus icon. Select the book as US Corp. It is a corporate book, so book class is coming as corporate. Now we have to enter all these accounts. In the interest of time, let me enter these accounts quickly. I have entered the required values. If we see these accounts, these first 2 accounts are used when we create an asset. The next 2 accounts are used when we run the depreciation. These 2 accounts are used when we perform bonus depreciation. In this case study, we will be doing that as well for US Corp asset book. So we will see that. The next 2 are used when a capitalized asset, when a CAP asset is capitalized. And these are used when impairment and revaluation actions are performed. So don't confuse with these accounts as of now. Let us keep it simple and go to default rules. Click on create icon. And this is where we will define the life of the asset and depreciation of the asset for US car book. And as per our case study, we are going to use, let me go to the case study. We are going to use straight line depreciation with bonus depreciation as well. So for depreciation method, let us select value as straight line. Straight line depreciation method. And life is 6 years. Select it as 6 years. Prorate convention and retirement convention means we can select it as calendar month. And here bonus depreciation, if you see the case study, when we start using this car in USA country, in the first month it should lose 20% of its value. That we can achieve through bonus depreciation rule. We have to create a bonus rule and assign it here. So there is an existing one where it gives 100% depreciation, but that will not work for us. We need 20% depreciation when we start using this asset in US car book. So let us create one bonus rule and we will use it here. To create the bonus rule, search for the task manage bonus. Click on manage bonus rules. Click on create icon. Name it as SM bonus rule. Select calculation basis as cost and rate type as year and bonus class as one-time depreciation. Click on create icon. In the first year, when we place it in service, we want 20% of depreciation. enter 8% as 20 and click on save and close. In another tab, now let us query the bonus depreciation. Let's refresh it. Now select the bonus rule. Now we can see SM bonus rule. Click on save and close. Save. We have now added it to the US Corp. Similarly, add it to the US Federal book as well. I have added the category to US Federal book with depreciation method as marks half year convention with 5 years life. Similarly, I have done that for UK car book as well with standard line depreciation, straight line depreciation and 10-year life, and UK tax book as well with MACRS half year depreciation method and 5 years life. This I have done as per our case study table that we have discussed earlier. I have added it to the 4 books. So now our second task is done. Third task is done as well. We have added this to set these things. Now we will create the asset in US Corp and UK Corp books. To create the asset, let me go to the instance. Click on add asset screen. Select US Corp book. Select the category as SM Corp, SM Car. We can see the category. Description as SM Car US. We'll keep the price as 30,000. Select a location. Click on next. Select an asset key. Select a random value. Click on submit for approval. Switch to US Corp. Now let us create one more in UK Corp as well, and then we will inquire these two assets. Select it as UK Corp. Category is SM. Click on next. Select an asset key. Click on submit. Go to UK Corp. Yeah, there is one ready for posting, SM Car UK. Let us select it. Click on ready to post. The assets has been posted and created successfully. For US, actually approvals was enabled, so I disabled it and then I have did the posting and they have been created. Now let us query the assets both in US and UK corps and see if they have been created. Go to inquire assets screen. Search with the category SM cars. We can see that in US Corp there are 2 cars created, and similarly let us search in the UK Corp as well. Search with the category SM cars, and SM Car UK has been created in the US Corp UK Corp asset book. So our next step, creating the asset in US Corp and UK Corp books, has been completed. So let us mark this step as completed. Step 4 is done. Now let us do one step. We'll copy the assets from US Corp and UK Corp books to tax books in US and UK countries, that is US federal and UK tax. To do that, in this tab, let me change the book to UK federal, sorry, UK tax. So we have created the period in Jan period. In the corporate book, in the UK corporate book, the current open period is Jan. So we have to do that in the Jan only, in the tax book as well. So we need to close the current period. Right now it is December. Let us close this period. Now the December period has been closed and Jan 26 period has been opened in UK tax books. Now we'll copy the assets from corporate book to tax book. Click on copy from corporate. Select the period as Jan 26. I think we need to first do for December. Let us submit this. Yeah, let us submit for Jan also, Jan 26 now. Now we have done the process for UK. Similarly, we'll copy the assets from in US as well. Change the book to US federal. We have to close December period here as well. Close the period. December period has been closed. Let us copy now. Let me submit it for December and then we'll submit it for January. They got copied from corporate book to tax book, and I have inquired them in UK, right? And in UK Corp, we can see the asset, and even UK tax book also now we can see the asset. Similarly, if you go to the US, it is already created in US and it is copied to UK US tax book, US federal tax book as well. So now we have completed our next step, that is copying the assets from corporate book to tax book. This activity has been done. Now our next job is we will run the depreciation for January period for 4 books, right? For US tax and corporate books, similarly UK tax and corporate books, and then we will review the results. Before we do that, first let us note few things, right? In US corporate book, and right now in the asset level, if you see, the net book value is same as original cost because we didn't run the depreciation yet, and the depreciation value, depreciation reserve is 0 as we haven't run that. And for US Corp book, we have defined a bonus rule as well to get 20% of the cost to be reduced in the first period. Right now, if you see, bonus depreciation is also 0, and this will get populated when we run the depreciation. Just make note of these observations. Then even in the federal also, in federal there is no bonus rule, only in the corporate book only we have bonus rule. But right now the depreciation is 0 as we haven't done the depreciation process yet. So let us do one activity. We will run the depreciation for US Corp book. US Corp. Click on calculate depreciation. Similarly, we will run the depreciation for US tax book, that is US federal. Click on calculate depreciation. Similarly, we will do the same for UK as well. Change to UK Corp. Click on calculate depreciation. Similarly, we will change the asset book to UK tax. And click on calculate depreciation. So now we have run the depreciation process for 4 asset books for January period. Let us wait for a minute for the scheduled process to complete. Then we will inquire the assets and we'll see the depreciation values. Now the depreciation programs have been completed and I have inquired the assets again. And now we are in the US corp asset book, right? For this asset in US corp, if you see, as per our requirement in the first period, 20% of the price has to be reduced. We defined a bonus rule. Because of that, 20% of 30,000 is 6,000, and there is a depreciation of bonus depreciation of 6,000 in the first period. And as we defined life as 6 years, and for each period we got a depreciation of 416, and the total depreciation is 6,416 in the first period. This is due to bonus depreciation of 20%. Whereas in federal book, in the tax book, there is no bonus depreciation, and we have selected MACRS half year convention. Because of that, we got depreciation of 500. Similarly, if you see in the UK corp book, we didn't define any bonus rule, so there is no bonus depreciation, and life is 10 years, so we got for 1 month it is $250 depreciation. Whereas in tax books, the life is 5 years, half of the life in corporate books, and we got 500 depreciation. As we have taken half year convention, we got this 500. From the next year, it will be double of that. So now we have completed the next task, that is we have ran the depreciation for 4 asset books for January period, and now we have reviewed the depreciation results as well. So these steps 6 and 7, running the depreciation for Jan period for 4 asset books and reviewing the depreciation results has been completed. So I have marked those steps to done. Now let us review the depreciation details in more detail. This is an existing slide. For that I have added this column, depreciation values in Jan 26 period, and the cost of the asset is $30,000, and in US corp we got in the first month 6,416 depreciation. This is because there is a bonus rule of 20% that should be applied in the first month, and because of that we got 6,000 depreciation. And the normal depreciation method that we have selected, that is straight line depreciation, for 6 years life it is 72 months divided by total cost, we got 416. So the total depreciation in the first month is 6,416. Similarly, in the tax book, when we divide it by 60 months, we got 500 depreciation. And this MACRS half year convention works bit different. In the first year, whenever we place it puts only half year depreciation. That is why we got 500. From the next year, it will get doubled. I'm not going in detail of that. And for UK, it is 10-year life period and 120 months. When divided by cost, we got 250. And for tax book, it is 5 years life. So it is 60 months. When we divide cost with 60 months, we got 500 depreciation. That's how we have understood what is an asset book. An asset book, asset category. We created an asset category and associated with 4 different asset books, and then we defined bonus depreciation rule as well, and we kept different lives across the books, different depreciation methods across the book. We created the assets, ran the depreciation, and we reviewed the results. Hope it gives you an insight in the asset categories end-to-end process. If you find this video helpful, please like and share your feedback in the comment section. Thank you for watching. In the next video, we will understand the asset creation from AP. When we purchase an assets from supplier through PO, and when an AP invoice is created for that, how we import that asset lines from AP to fixed assets module, and we create the assets. We will discuss about that process in the next video. Thank you for watching.